This is Wallet Brief, where we break down what actually moved the U.S. economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week, and what it means for your wallet. Over the past year, the U.S. labor market has remained surprisingly resilient despite higher interest rates and slower economic growth. Employers across several industries continued hiring, and unemployment stayed historically low for much of the period. However, over the last few months, signs of a more balanced labor market have started to appear. Job openings have gradually declined from their earlier peaks, and some sectors have slowed the pace of hiring compared with the rapid growth seen earlier in the recovery. This week's employment signals continued to reflect that transition. Hiring remains steady overall, but new data suggests the labor market may be moving away from the extremely tight conditions that defined the past couple of years. In practical terms, this means companies are still adding workers, but they may be doing so more cautiously. Wage growth also appears to be stabilizing, which could help ease inflation pressures while still supporting household income. The trend right now can best be described as gradual cooling rather than a sharp slowdown. The labor market remains strong by historical standards, but the intense demand for workers that previously drove rapid hiring is beginning to normalize. For households, the labor market still plays one of the biggest roles in financial stability. A strong job market generally supports steady paychecks, consumer spending, and overall economic confidence. At the same time, slower hiring could mean fewer opportunities for quick job changes or rapid wage increases compared with the peak hiring period. Looking ahead to next week, economists will be watching new jobless claims data, hiring announcements, and business surveys that provide early signals about employment trends. These indicators will help determine whether the labor market continues stabilizing or begins slowing more noticeably. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with the updates that matter. Until then, stay informed and protect your wallet.